The Silver Institute has just released their much-anticipated World Silver Survey 2023, which covers the year 2022. As we reported earlier this year on initial estimates, 2022 did indeed break all records. Not only did 2022 set a record for demand, some 1.2 billion ounces, but falling supply also saw a record supply-demand deficit of 237 million ounces. Further, when combined with the 51.1 million ounces deficit in 2021, the combined surpluses of the preceding 11 years were wiped out in just 2 years. And they are forecasting continued deficits each and every year to beyond even their 5-year outlook. So, let's look at the summary highlights from the report. First, the obvious question: in a year where the average price fell by 14%, why didn't the price reflect this demand and deficit? In essence, as with gold, the rising rates and tightening liquidity environment saw Wall Street exit ETFs and look for yielding alternatives. But as with gold, and as we discussed previously, link below, the global liquidity flows turned from tightening, removing liquidity, to easing, adding liquidity, around October, and that is about when both metals decisively turned. Silver bottomed at $18 and, despite the pullback last month, has generally been climbing to its current $25, a 39% gain. Recall from the link just provided that history tells us we are still in the bumpy bottoming phase and could expect 3 years of bull market for precious metals from here. So now let's look under the hood at what happened to see these dual records broken. Silver demand. Overall, all sectors were up last year, and despite the fall in ETFs, physical investment demand saw the biggest increase. Investment demand. Per the images shown, it was a year of 2 investors. Those looking beyond the carry cost bought up physical metal at a record rate, up 22% to 332.9 million ounces, whilst those whose computer said high rates sell precious metals saw outflows from ETFs at the fastest rate since 2011, down 11%. That said, ETF holdings are still historically very high after the huge inflows we saw in 2020, so it's all relative. The physical demand was absolutely dominated by India. Now officially the world's most populous country, Indian investors can spot a bargain a mile away. They love precious metals and they pounced on the cheap silver against its strong fundamentals. The table shown shows that Aussie investors, by percentage increase year on year, were second placed behind India with 17.3 million ounces snapped up, something Ainslie has certainly witnessed with a record year as well. From the report, quote, "One of the most notable features of last year's silver market was India's record imports of silver bullion, which surged by 244% to 306.6 million ounces. As at times, weak prices led to both a jump in demand and restocking of a depleted supply chain. This in turn underpinned the near doubling of UK exports, which also achieved a record total of 363 million ounces in 2022, which saw London Vault holdings drop to a reporting low." End quote. Industrial demand. Quote, "Industrial silver fabrication increased by 5% in 2022 to a record high of 556 million ounces. Electronics and electrical demand rose by 6% thanks to PV installations, power grid investment, automotive's recovery, and limited thrifting. Brazing alloys fell by 3% as losses in China, due to the lockdowns, outweighed gains in most countries. Other industrial offtake grew by 7%, due mainly to gains for EO catalysts. Offtake is expected to grow by a further 4% to another high in 2023, with rising PV end use again to the fore." End quote. As we reported last month, link below, quote, "The UNSW research paper forecasts silver demand for solar panels alone will require over 20% of current supply, and supply is trending down by 2027, double of that currently." By 2050, photovoltaic demand will use 85 to 98% of current global silver reserves. End quote. Photographic demand. Whilst many think of photographic use of silver as gone, it remains a significant and fairly stable number in the demand equation. Quote, silver demand in photographic applications remained broadly flat last year at 27.5 million ounces. Sales of consumer and professional film and paper both edged higher, nearing their respective pre-pandemic levels, although these were already at historic lows. There are tentative signs that film photography is making a return, as a number of filmmakers not only revived some discontinued films last year, but also introduced new film stocks. Black and white film, which has higher silver loadings than color film, achieved solid gains. Indeed, demand overtook product availability, although this was in part caused by supply chain issues. End quote. Jewelry and silverware. Quote, global silver jewelry demand jumped by 29% in 2022 to a record 234.1 million ounces. India drove the bulk of these gains due to a rebound in consumption and restocking. The rest of the world was flat year on year as a post-COVID recovery for most countries offset losses in China, Russia, and the US. Silverware fabrication in 2022 surged by 80%. End quote. Silver mine supply. Quote, global silver mine supply fell by 0.6% year on year in 2022 to 822.4 million ounces, largely due to a drop in Peruvian production. End quote. Per the table shown, Mexico remains dominantly the world's biggest silver producer, with Australia currently ranking 8th, but experiencing the biggest percentage decline last year at 10%. Quote, largely due to planned lower tonnage throughput at South 32's Cannington while crushing infrastructure was relocated. End quote. As regular readers will know, silver supply is largely a byproduct of other mining, with, per the chart shown, primary mine supply accounting for only 27.8%. Silver mining cost. Quote, inflation in almost all key input costs last year drove primary silver miners' all-in sustaining costs up by 15.8% year on year. End quote. Per the chart shown, this pushed costs above even the current $25 per ounce spot price, putting further pressure on mine supply and that deficit. As for the rest, well, that's a little more complicated. From the report, quote, most silver mines are polymetallic in nature and produce significant amounts of lead, zinc, gold, and/or other metals. Revenue generated from these metals lowers cash costs as byproduct credits. In 2022, zinc prices increased by 15.6% year on year, while gold remained almost flat and copper and lead prices fell by 5.5% and 2.5% respectively. The higher zinc price pushed byproduct credits from zinc higher, while increased gold production from these miners pushed revenues from gold up. These increases surpassed lower revenues from lead. End quote. Silver recycling. Quote, silver recycling grew by 3% in 2022 to a 10-year high of 180.6 million ounces. The key driver was the 7% rise in industrial scrap, mostly driven by the recycling of spent EO catalysts. Jewelry, silverware, and coin scrap, in contrast, were almost unchanged, while photography's structural slide continued. End quote. And finally, if you missed our article a couple of weeks ago on the pricing fundamentals looking forward for silver, it is well worth a read. Link provided. Structural deficits in supply and multiple coinciding drivers of demand look to bode well for the white metal. Thanks for watching. Please like, share, and subscribe, and balance your wealth at ainsliebullion.com.au.